Hello and welcome to BloombergQuint. You're joining us on this special broadcast where we're having a conversation with Mr. Prashant Kumar, the MD and CEO of Yes Bank. Now, Yes Bank reported its fourth quarter results for the financial year ending March 31st on Saturday. And for FY22, the bank reported a full year profit. This is the first full year profit that the bank has reported since FY19. We have with us Mr. Kumar here. Mr. Kumar, welcome firstly. Let me quickly get into the questions. For the full year profit after nearly 3 years, just wanted to get a sense as to what is contributing to this. How exactly did this profit play out, sir?
So, Shrad, not only the profit in the entire year, I think the most important for us that quarter after quarter, we are seeing an improvement both on the business growth and also on the profitability. So I think this gives us a confidence and also the sustainability of our performance over a period of time. Two major contributions which has come for the profitability. One is in terms of expansion of NIMs, and the second is in terms of our recoveries and the upgradation and the control on the slippage. So I think these are the two major things.
Okay, let me take each of these parts separately. First, let me come to the asset quality side of the story. Now, of course, there has been a consistent improvement over the last two fiscals. Are the legacy issues completely resolved? Is there still something pending as far as Yes Bank is concerned?
So legacy issues have been taken care of almost 12 months back.
Yeah.
And I think if you see last 1 year, it's only like slippages are continuously coming down and the provisioning requirement is also getting down. Okay. And recoveries are improving. So there is no legacy issue. The only thing would be how fast we can recover our bad loan portfolio.
Yeah. Okay. As far as the COVID-related problems are coming now, of course, the Reserve Bank of India last week just put out a report saying that India will take about 10 to 12 years before some of these COVID-related issues are fully resolved. How do you see that the after effects of the pandemic? Because obviously during the pandemic there were losses of life as well as livelihood that led to some impact on bank balance sheets as well. But you were all very well provisioned. But in the future, do you think that aftershocks will continue?
No, I think if we see this aftershock can happen only for the restructured book. Otherwise, everything else has been already accounted for. And on the restructured book, again, it's a very, very pleasant surprise for us in terms of the behavior. So these units have started generating cash flows, which is able to service their loans and the interest. Some of the units have not even availed the FIT. So what we are seeing, and we have not seen the slippages coming out or any stress in the stress book. So I think this restructured book and the collections, the way it is happening, we are not seeing any, say, significant slippage out of that. Rather, we are quite hopeful that they are also like a normal unit as compared to us.
Okay. Coming to the names as well as the growth side of the portfolio. Now, as far as that is concerned, you are pushing for a higher yielding retail SME sort of a portfolio, but wholesale is also coming up now. For a lot of banks have been pointing out the fact that companies are coming back because that arbitrage with the bond market is sort of ending. What is your experience like, and where do you see this NIM trajectory going?
Basically, if you see the NIMs, I think it is contributed by three things. One is our reduction in the cost of funding. So we have a huge opportunity to further reduce it. Yeah. And we know like interest rates are moving northward, but our reduction in cost of funding would be mainly on account of proportion of our CASA deposit going up. Okay. So today we are at almost like 31%. So there is a huge scope available for further reduce the cost of funding by increasing the CASA deposit proportion. We are adding almost 1 lakh new customers on the CASA side every month. So I think this is helping us in terms of increasing the proportion of CASA deposit. That is one part. The second thing is also in terms of the loan growth. Now, loan growth, if you just exclude the large corporate last year, the other part, retail, MSME, medium enterprise, we have grown by 27%. On the large corporate also now there is a shift Last year, the corporates were availing credit from the market and repaying to banks. Now they have already started coming back to the banks. And with the inflation, the working capital requirements have gone up. So I think what we are targeting is minimum 10% growth on the large corporate and 25% growth on the retail and MSME. So with the 15% growth on loans, continuously reducing the cost of funding, and the third important part is in terms of slippage. So I think our slippages are coming down quarter after quarter. If we see our overdue book more than 30 days is also coming down significantly. Our collection efficiency is now touching almost 98%. So with this, I think the expansion of NIM, we exited the year around 2.5% NIM, and we are hopeful of exiting the next financial year with a NIM of around 3%. So I think these are those factors which is helping us in improving our business.
Okay. The next question with respect to the ARC that you were planning. So you have guided that by June 30, you expect to close the process. How is that going to aid, say, growth? Because obviously there's going to be better capital utilization at the bank if the bad loans are off the balance sheet. But how does this contribute? How does this help, say, future plans?
So I think one part is definitely optical. In terms of today, if anybody is seeing the bank with a 14% gross NPA number, and if you see the bank with almost like negligible NPA, you look at it from a different lens. The second part also in terms of the managerial bandwidth, which is spent in terms of the recoveries and the upgradation. That is also very important. And definitely, we are not only seeing this ARC as a resolution for our stress asset. We are also seeing this as a business opportunity for the bank because there is a large market on the stress asset in the country. And unfortunately, we don't have the good entities who are on the resolution on the stress asset. With the kind of expertise which our bank is having, I think we would like to scale up this business and also acquire the stress asset from the other financial institution. And this can give us a very, very good return going forward.
Okay. Have conversation on that front started already, or are you still? I mean, this is still in the planning stages of acquiring other bank.
No, so I think once we form that, and when we actually demonstrate our capabilities, then I think we would be getting good interest from others.
Okay. This ARC has been in the works for a while now. I mean, you had 2 rounds of setting it up. I'm just trying to understand. What gives you confidence that it will close in the next 2 months?
The issue is, I think we are at a quite advanced stage. And this process is very, very complex because not only you need to meet all the regulation, you also need to be very transparent.
Right.
And at the same time, I think this would be the first experiment in the industry where a bank would be partnering with this.
Right.
So I think there are a lot of things which we think if we are able to resolve it before signing finally, it makes sense instead of facing those issues subsequently. Right. So I think most of the things have been resolved, and I think the way we are guiding, I think in June we would be able to complete this.
Okay. You also talked about during the media interaction. You said that this year would be the time to sort of add a buffer to your capital base, considering the uncertain environment that is there globally. I'm just trying to understand whether anything concrete has moved in that direction.
So I would be saying first thought process in terms of when we raised 15,000 crores in July 2020, everybody on the street was expecting we would come back to market in 12 months. We were very confident there is no need for come back to us at least for next 2 years.
Right.
With the current capital, I think it can take care of our growth requirement even for the current financial year.
Right.
But I think once we have reached to this stage, now it becomes important for us to build a buffer where the strong balance sheet would become further strong. So only to make this balance sheet further strong and to take care of any uncertainties in the future, I think it is important to raise some CET capital. So I think we would explore all opportunities which are available in the market and whatever would be the good for the bank and for our stakeholders, because ultimately it would also be a dilution for our existing equity holders. So we need to be mindful about the interest of everyone, and we will do whatever is good for everyone.
Just trying to get a sense on the liabilities front. Now, there was a period of time when Yes Bank was losing deposits. Now, you have returned to normalcy on that front. You're adding customers. How exactly has the bank managed to do that? And what continues on that front to ensure that that pace remains going ahead?
Last 2 years, we have been able to double our liability base.
Yeah.
At the same time, we are adding now more than 1 lakh customers every month. Okay, that shows actually the trust and the confidence. The third part, that adding more customer, increasing the liability base is happening while we are continuously reducing our cost of funding.
Right.
So that shows in terms of the quality of the service and also our digital offering to our customers. I think this journey would continue, and we have a very good opportunity in terms of further improving the liability base and at the same time reducing our cost of funding.
Where are you adding these liability customers? Because in urban areas, at least, there is a large presence of most banks, right? But are you going deeper into geographies in India? Is there anything specific that you're tracking them?
So along with, I think, the fully utilizing the potential which is available across all our branches, and we have already started doing the expansion in our branch. So last financial year, we have added 50 new branches, and the current financial year, we would be adding something around 175 branches. And we are opening our branches in those areas where we are not present.
Right.
So it would also be in terms of exploiting the potential of the markets where we are not there.
Right.
And definitely the focus would be more in terms of tier 2 and tier 3 cities.
Right. Right. Fair enough, sir. Last couple of questions. Where do we see Yes Bank, say, by FY25? It's about 3 years away, but I'm just trying to gauge the confidence of a management that has steered clear of the stress and is now looking at future for growth. So what is FY25 going to look like for Yes Bank?
So today we have already become the 6th largest private sector bank. We would like to at least improve that position by at least 1 or 2 notches in next 3 years, and very, very sustainable delivery both on the business growth and the profitability. And in 3 years, I think this ROA of 1 to 1.5% is something which we are very confident to deliver to our stakeholders.
Right.
So I think this would come as a very, very strong bank in terms of customer service, the business growth, the profitability. But I think the most important part, which all of us need to remember, this is a franchise which is handling every third digital transaction of the country. So we are playing a very significant part in the digital story of the new India. And I think this journey we would continue. And I think the way the entire thought process about going more digital and actually getting those opportunities out of digital side, I think we are at the forefront. We would remain at the forefront, and we would like to see how we can contribute to the country as such.
All right, sir. Thank you so much for joining us on this conversation, and thanks so much for watching. Please stay tuned to BloombergQuint.
Thank you so much.